Hi guys, hope everyone's doing well. Thank you for all tuning in. So this is the second week for the Orderflow Chronicles series that I've been doing with CTI. Shout out to CTI, one of the best props in the game in my opinion. Um, so yeah, this is the second week. If some of you guys who tuned in last week will remember, we spoke about volume profile and a bit about market profile. You can actually see I have created a playlist in CTI's YouTube called Auction Market Theory. Actually, it's either that or the Orderflow Chronicles. I can't remember, but one of the two. There is a playlist. I will just double check that, and all the previous video we did is in that playlist, so you can go ahead and watch. So today is going to be about order flow level 2 data and what it is. So the futures markets, unlike CFDs, is all routed through one exchange, and that exchange is through the CME, right? This is Chicago Mercantile Exchange. Now, every single order, right? No matter, doesn't matter what broker doesn't matter what broker you trade with. Every single order is routed through the same exchange, right? That means that if you have a live data feed, you can see all the orders that come in, both buy orders, sell orders, and limit orders in the futures markets, right? So, you can use this data to trade gold, to trade Nasdaq, S&P 500, Russell, Dow, all kind of futures instruments. But if you're mainly CFD traders, you can use it to help trade Nasdaq CFDs, S&P 500 CSDs, and even US 30. The problem with US 30 is a very, very thin market, so it's a little bit more difficult. But anyway, that's enough rambling on. Do remember, guys, that I do post a lot more content on my Instagram and my Twitter. They are in the link in the description to this video. My Instagram is at AMTOF GROUP. My Twitter is @AMTOF. So yeah, drop me a follow there. I'll post loads more content. Right, so let's get into the nitty gritty of what order flow is. Right, so just going to do sort of a demonstration. Now, at every single price level, right, above price and below price, right, at every single price level, we have what are called limit orders, right? So these are the different types of orders on the market. So you have, let's just draw this out, right? I'm just going to draw a visual representation of the depth of market, right? Some of you might know what a depth of market is, some of you might not know. No worries, we're here to explain it, right? So let's say price is currently at this level, which is, let's say 57.3, right? Now you'll have limit orders, buy limit orders below this level, right? You will have buy limit orders below this level. Let's say you have 10 here, 5 here, 20 here, right? 22, 7, 10, right? Then you're going to have sell limit orders up here. So this is basically the what is going on behind the scenes in the market. These are basically the foundations, right? So you'll have, let's say you have 15 here, 7, 11, 12, 30, right? Now these are resting orders at every single price level. Now it does not matter how many resting orders are sitting at each level. Without aggressive market participants, price is not going to move. So what is going to move price? Let's say price is here. If price wants to go up, and let's say this will be 57.4, right, 0.5, 0.6, then you'll have 57.2, 57.1, and then 56.9, right? Sorry, you'll have 57.0, then 56.9, right? So the only way price moves up or down is if an aggressive if a bunch of aggressive participants come and remove all these 15 limit orders, then price will tick up to the next tick, which is 57.4. That's how it works, right? Now for somebody to do that, they have to be what's called an aggressive participant, and they have to execute a market order. So when you go onto your your entry platforms, MT4C trader, whatever it is, when you press enter market now, market order, you are an aggressive buyer that is lifting limits above or below price. If you do market sell, what you're going to be doing is you are going to be removing all the limit orders that are at this price, right? So when 10 sellers sell into, this is what we call the the bid, and this is what we call the ask, right? So if 10 aggressive sellers sell into the bid at 10, price will tick down to 57.2. That's how it works, right? So there's two types of participants in the market. You have your passive sellers and passive buyers, right? These are people. So this is like when you go onto your execution platform and you put limit orders, right? Where you wait for price to come to your level, you will be sitting on the bid. And if you're waiting for a sell, you will be sitting on the ask, right? Now, for price to move, it has to take market people that execute at the current market price. And when enough people remove limits, price moves up and down. That is what causes price to go like this, is aggressive participants. Passive orders do not move the market. You could have 600 limit orders up here. It does not matter. It's not going to move price, right? So it's very important to realize that. Now, you also have to remember the different types of orders. If you were a buyer up here, right, let's say you bought at 56.8, right, and price comes up now here. So if you've put in a market buy order and you have a take profit, your take profit, what does it come up as? Your take profit is essentially a sell limit order, and your order will be at this area here, right? So when you're looking at the depth of market, it might look like, oh, there's loads of sell orders here, which might confuse you to think a lot of sellers want to enter the market, but that could be previous buyers taking profit, right? And that's where that will take us onto the concept of absorption, but we're going to come onto that in a little bit, right? I just want you to sort of understand the mechanics of the market. You have your limit orders and your aggressive participants. Same thing for the sell side. If you sold up here, right, and price starts coming down, your take profit is going to be what? A buy limit order, because you're forward borrowing. You're selling here, so you have to buy back the asset at a future price, which means your take profit is going to be a buy limit order. And the same thing for the flip side for a stop loss. Now, if you're a seller here, your stop loss is going to be a buy limit order. And if you're a buyer up here, your stop loss is going to be a sell limit order below. But you won't see those, because if I'm selling here, my stop loss is going to be above, and you won't see. If price is down here and my stop loss is all the way above, you necessarily might not see where these stop losses are, because it could be higher. And depending, some depth of markets, they only show, obviously depends on your settings, but not all of them will show as many ticks as possible, right? I'll just show you what my depth of market looks like, right? So I'll just show you for ES. Do I have it for ES? Don't think I do. Right, so I'll just show you my NQ. So this is NQ, so just ignore this for now. So I'll just tell you what this is. So this is an ask bid difference profile, right? So you can see all the buy orders that were executed at this price, all the sell orders, right? So you can see where the strong differences are between buyers and sellers, right? Then you have these are what you call your limit orders, what I spoke about, right? The resting orders at each price level, right? So this is this bit here, same thing. Then you have your buy limit orders in this blue column. This is your bid and your ask, right? Bid, ask, as I highlighted here. Then on this side, right, these are the aggressive market orders, the aggressive buyers that have come in at these price levels. So here you can see, for example, we have 34 aggressive buyers that hit the hit into the ask at this price level, and same thing for the sell side, right? Then here you have your this is a live tape, so one order just came in, right? This is a live 2 buy orders, so when it highlights blue, those are 2 buys. This is the pool stacking column, so where you see these minus numbers and the plus numbers, right, these are people adding to this, to adding limits here. So here, this means 19 people added. So where you see 34 limits, 19 people just added to that, right? And then where it says minus, that means 7 people removed their limit orders from that level. And this can be quite helpful when you're looking for long, let's say you're looking for long positions, right? If you look at it, if you think of it from the auction perspective, if you're a seller and you're sat here and you can see buyers get, you think of it of a live sort of market auction, right? Because that's essentially what it is, right? Now, if you're a seller and you're sitting somewhere here and you can see buyers are getting aggressive, what your job as a seller is to sell as high as possible. So if you see buyers getting aggressive, you're most likely going to remove your limit orders to see how high up price can come for you to, because if you want to sell you want your orders to be filled as high as possible if you're a seller. Same thing for the buyer. If you're a buyer and you see sellers getting aggressive, you're going to say, well, hang on a minute, let's see how far price can come down, let me remove my limit orders, right? So that's essentially what the market is: limit orders, market orders, and that's essentially how you have to kind of look at it. Now that we've kind of got that out of the way and people, you understand the take profits and stop losses are also considered different orders. I'm going to show you how we kind of visual what it means in terms of how it's going to be shown on the bid or ask. So we have this an order flow tool. I'm just going to get it up now, which is called a footprint chart. So this is a footprint chart, right? So the footprint chart, you have your bid and ask on this side, right? So bid means how many, so on this side you have how many people hit the market sell, and on this this part here you have how many people hit market buys, right? That's what a footprint chart is. Now, if we kind of know that, if we go back to the logic of how the order book works, right? You can imagine, as I said previously, right? If you are a seller, right, and you have a take profit, or let's say for a buy, for example, let's say you were a buyer at this level, your take profit is going to be a sell limit order, right? So let's say you bought at this price level and you have a take profit, right? Let's say your TP is here, right? Now, your TP is going to be a what? A sell limit order. Now, if price comes up, for you to sell, you have to understand that there has to be a person taking the other side of that trade. So if you sell here, if you have a, let's say you have a limit order here, right? Let's say you have 9 limit orders. For your take profit to get filled and for you to bank money on that trade, 9 buyers have to come in and hit the ask, right? And take you the other side of your order, and you have then exited the trade. So this is the bid, this is the ask, right? Same thing on a footprint. You have your bid this side on this column, and you have your ask on this side, this column, right? So for your take profit to be triggered, it is going to print on this side of the footprint, right? And it is going to have a 9 print. Now that might look on the footprint on this side, because some people think that the footprint, you know, this shows you all executed market buy orders, right? So people, there's a misconception about the footprint chart that this side is all buyers, this side is all sellers. Not true, right? It's people that execute market buy orders. So a lot of these orders that you see here on the buy side, those could be take profits, right? So when you start seeing, so just imagine if loads of people bought here, price comes up, you all of a sudden start to see loads of buying at this level, right? That is because a buyer has bought into a sell limit, right? Makes sense? If a sell limit has been triggered, it is going to show up as a buy, because think about it, when price comes up, as I said, as we keep ticking, for price to move up to this level and for your orders to get filled, somebody has to hit market buy to your 9 contracts. A sell limit order cannot fill another limit order. It has to take an aggressive participant to fill that order. So that will show up as a buy when you take profit. Now, here's the opposite. Now you have to realize, now you have to think of it as, what if I bought here, right? and prices come up, but my take profit's here. But what if I want to exit the market here, right? Then what you do is you then have to do close position. And what happens when you close your position, or you flatten, or you take profit where you don't wait for a limit to get filled? What are you essentially doing behind the market? You are selling into the bid. That is what you are doing, right? So sometimes take profits where they don't wait for limit orders to get filled. If they hit a market sell, it will show up on the bid, and you will show up on this column of the footprint. So you sometimes might see loads of selling going on, but it's not necessarily people actually trying to push the market lower. It's people taking profits. So it can be confusing when you see certain things, and this is why it's so important to only use a footprint chart at areas of previous support, resistance, or supply and demand. You don't want to use it at every single price level because it can get very confusing, a lot of noise. You only want to look at it from a perspective of when price is at a zone of interest, right? So hopefully those sort of mechanics of things make sense. So now we're going to talk about a concept called absorption. So based on this, right, I'm going to leave this up here. Now, let's say, for example, you draw this area out here as demand, right, where you want price to come up and you're looking to short in this area. Now, there's two types of reversals you want to look for in a footprint chart. You have a concept of what's called absorption and a concept called exhaustion. So I'm going to talk about those now. So first concept is absorption. Now this will happen at different price levels, but like I said, it's only important for this to be shown at a price level that is relevant, that we've marked out as either supply, demand, support, resistance, whatever you trade, right? Imbalances, order blocks, whatever it is. Now here's what absorption is. You see price coming up. Now you have to imagine this from the example that I told you, people removing limits and people selling into the bids, right? So if price comes up and we're seeing normal size momentum, normal size buying, and we're moving. Now you can imagine if loads of sellers want to get into the market and they start stacking their limit orders, right? They'll start stacking some large size limit orders, right? And a lot of the times what sellers do is they don't put all their limit orders on the bid so you can see them straight away. What they'll do is they'll do something called reloading. So they'll put 15 here, 15 will get taken, then they'll quickly add another 15, add another, add another, add another, add another, right? That's called reloading. Rather than let's say, for example, somebody has 100 limit orders, they want to fill at this price. They're not going to put all 100 there because everyone can see it. They're going to try and disguise their orders. So what they'll do is they'll put 10 at a time. So they'll do 10, 10 will get filled, they'll add another 10, add another 10, add another 10. That's what you call reloading, right? So now here's a concept called absorption. Let's say buyers come up into a demand zone, a supply zone where you are now looking to short. Now, if there's loads of sell limit orders, let's say there's a shitload of sell limit orders at this level, right? So let's say there's heavy sell limit orders willing to get filled. Now, what's going to happen is buyers are going to be hitting into this level like they normally are, right? And they're going to hope for price to continue higher. But what you're going to start seeing is buyers are going to continually hit into this, continually hit, continually hit, continually hit, continually hit. So buyers are going to be lifting these sell limits, but they're not going to be able to push price too high because sellers are adding to their orders. So yes, somebody said, is reloading the same as an iceberg? Kind of, right? Icebergs is when you're just adding to your orders. So if you can imagine prices coming up to this level, buyers are keep hitting into it, but so market orders are what you call demand, right? That is demand here and now wanting to lift the orders. This side here is called the supply, right? Because this is you got to think of it of actual stock, right? So imagine you have stock you want to sell. Stock that you hold in a warehouse is called supply. That's the same thing what this is. This is supply, and your demand are your customers that come into the shop and take things off the shelves. So this is the demand. Now what you can see here is there's going to be lots of demand, but they are being outnumbered by the supply. That is called absorption, right? Buyers, aggressive buyers, are getting absorbed by passive limit sellers, passive sellers, right? That's what this is called. So on a footprint chart, here's a good example, right? You can see lots of buying by looking at the volume profile. You can see lots of delta. Now, delta is the difference between buyers and sellers. So at this price level, we had 4 sellers to 111 buyers. So that is a difference of 107. So you can see at this level, there was a lot of buying, but the market moved the other way. So what is happening at this price level here? You had buyers chipping into an area of heavy supply, and they just get outnumbered. So you can see large delta here, 381, right? Which means that in this candle specifically, there was 381 more buy limit orders hit the market than sell limit orders. So if loads of buyers are at a level and price is not moving higher, so think about it. If there's a lot of buyers and there's not a lot of sellers standing in their way, price should move up fairly highly, right? However, when there's loads of buyers but price is not moving and it's doing something like this, that's telling you there is a wall of sell limit orders sitting at this level, and they are not able to move price. And then eventually what will happen is buyers will give up. They will sense that, you know what, sellers are here. What they will do is buyers will remove their limit orders, and then aggressive sellers will push the market down and start selling into the bid. That is exactly what absorption is. Absorption is simply when demand is being outweighed by hidden supply. So on a footprint chart, whatever you want to use, a heat map, you're going to see aggressive buying, but price going nowhere. Now, you want to use this in areas that you mark as supply and demand, and you want to see how price reacts, how order flow reacts at that level. That's what you want to do every single time. You don't want to use a footprint chart in the middle of nowhere. You only want to look at it in your areas of interest. Now, the second topic is going to be called exhaustion. Now, again, this is something you only really want to look at when price comes into your level of interest. So here's a good example of exhaustion. You can see prices come into this area where we've reversed. Now, exhaustion is when you have these zero prints at these levels, right? So at this level, you can see a lot of exhaustion prints, and you can also see thin volume at these highs, right? Thin volume, thin volume, thin volume here, right? Now, what this is indicating is that buyers are losing momentum, right? Because when you see zero prints here, that means there is no more sellers, that there's no more people willing to take the opposite side of this trade. So if there's no one that buyers can buy from, they're exhausted. They can't fill their orders, right? So here you can see buying getting aggressive in the middle of these candles, and then towards the top they're getting exhausted. They come up again, exhaustion again, right? So exhaustion is just when there's a slowing down of momentum, right? Now this one is a little bit more difficult to read. So what I like to do is I don't really trade exhaustion. I like to look for it, and when I see exhaustion, I then want to wait for aggressive sellers to enter the market, right? I want to see heavy selling, right, on a depth of market or a footprint chart. Now, I do use a depth of market, right? And so this is a depth of market. Now, to see aggressive sellers, you basically want to see some footprints don't have this middle column, which is basically a live tape. Some do, but anyway, even if you don't have it, you want to see the aggressive sell orders start pushing price down. It's no good if you see big sell market orders and price doesn't really move high, because what's that telling you? That's aggressive sellers are being absorbed by buyers. So you want to see a push down. Now, I don't really, if I'm honest, I don't like using a depth of market, because it's not a great. It's a great tool to see how an order book works, but in terms of visuals, a footprint is better because it helps me identify where aggressive selling is. I'll show you how you can identify that. So now, for an aggressive participant to push the market, there has to be what's called an imbalance. So for an aggressive buyer, right, a buying has to do this where price quickly moves up like that, and there has to be an area of imbalance where there is low volume on this side, right? Now, I spoke about this last week when we talked about auction market theory and looking at volume profile, where you have these areas here. We see this volume profile. We had heavy volume here, low volume, heavy volume, low volume. So my footprint study will highlight these imbalances, right? This is showing me that aggressive sellers have pushed the market down, right? The point of control is closed at the low of the candle, and we've closed below the point of control, which means that there is aggressive selling here that is pushing the market down, right? So what I can see from looking at this is a perfect sell order for me. I can see we've had aggressive buying into this area, right? You can see all the aggressive buy orders have been triggered, right? They are not getting rewarded. They are not being able to push price down, and aggressive sellers come in and take the market down. Now, this is your signal to entry. Stop loss above the high. Let the market run down, right? We saw absorption and exhaustion at the highs. You have to then wait. Some people don't wait. Some people just are confident, saying, right, absorption into my area. Let's wait for selling imbalances. And they see these imbalances, and then they price tanks down, right? Another sign of weakness in one area, right, is when price can't really close too far above the point of control. So here you can see price was closing above. Here we closed at the point of control. Here the point of control of the candle, which is where the point of control is basically the area where it had the most volume traded. So here we you can see the candle closed here, right? If you just the candle closed here. Here we closed above, but then on this candle we closed below. On this candle again, which is confirming seller aggression, point of control was up here. We closed far away from it, which means sellers are taking this thing down, right? So you see the absorption where all the aggressive buyers get absorbed, and then the sellers hit the market and come down. So hopefully this starts to make sense. Like I said, guys, drop me a follow on Instagram. My link is in the description. I've got tons more content there. I do live streaming every day for my community on my Discord. Go hit that up. Right, so I'll be dropping tons more of this. This is just a once a week kind of webinar where I kind of explain things. Now what I'm going to do is I'm going to show you how absorption actually plays out real time in the market, right, and how we can use this to trade. So I'm going to just do some very brief auction market theory analysis based on the topics that we spoke about last week. So today on NQ, for example, right, remember I was talking about last week, I was talking about your value areas and previous areas of imbalance. So I don't really trade London session on NQ. I trade only the US session. So in London session, I can see we've traded outside of yesterday's value area. We had some imbalances here, as you can see from this low volume node, right? So this kind of area here is in line with yesterday's value area, right? Now, this is an area I want to mark as potential supply zone or resistance, whatever you want to call it, right? We had previous resistance here, right? We had a double top here. So I would like to see potential liquidation of that double top and continue selling, or what I could look for is either a break, retest, and continue long and take out these equal highs here, right? One or two things are going to happen. It's very important you're not married to one side, right? So anyway, let's look at what happens on a footprint chart and how we can identify this. Right, so this is the area where price came into. So when we're looking at this footprint, we can see delta is getting very strong, right? We can see we've got 305 positive delta, 202, right? And if you see as we're coming up, you can see on the delta, there's lots of buying on the volume profiles here. You see here's pure buying, lots of buying here. Now, as price is coming up into this area, we're starting to see a lot of exhaustion prints, finished auctions. Remember I spoke about these zero prints? We're starting to see a lot of zero prints here, zero prints, zero prints, zero prints, low volume here, low volume here, and here you can see a lot of low volume to the sell side, right? Now you can see that buying is getting aggressive in this area, right? I actually have a study, I'll show you. I have a custom study that actually highlights where there's aggressive buying and selling. So here I can see, so here's how you here you can see aggressive selling with the red candles, but they're being rewarded for their effort because they've pushed price all the way down. Buyers have been getting aggressive here, but they're not really being rewarded for their effort because prices this is what I call compression price action, right? Compression is when price does this. It just moves very slowly, right? You want to see clean price action like this. This is just a bunch of compression. So I can see here, buyers are getting absorbed, right? Now you've got aggressive buying here, lots of delta. If you look at this, this is a cumulative visible range delta. So anything that is in the range of this footprint, it is going to show on here. Here I can see lots of volume. Volume gets thin over here, right? Aggressive buying is not going anywhere. This is not a trigger to enter. I want to wait for aggressive selling. All of a sudden now, I see some sell side imbalances and price closes well beyond the point of control, right? Again here, you have aggressive buying stuck at these highs. Why? Because these have been absorbed by passive sellers. So all these buyers you can see here, this net delta, right? Remember I showed you on the footprint, the depth of market. What does that mean? If aggressive buyers are hitting into the ask and it's not going anywhere, that means they are being absorbed by a heavy wall of passive sellers, right? And when that happens, aggressive sellers then push the market down. So when I can see aggressive selling here, price closed beyond the point of control, we've got large sell deltas here, large deltas here that have pushed price down. So this is my signal to enter, and my stops will go above these highs. But like I said, it's only important you do this when price comes into an area of interest. Now I'll show you a trade that I took from Thursday, sorry. So Friday I didn't trade because we were in all-time highs, right? So Thursday my trade was simple. I marked out all-time highs, right? And I waited for sellers to come in. So if I show you my VWAP study, so this is a VWAP. So next week I'm going to talk about VWAPs. So this is a VWAP with standard deviations. So this white line is your VWAP, and these are your standard deviations of that VWAP. So we're going to talk about that next week. Don't worry about it for now. It's just going to get confusing. So here you can see again, we took all-time highs, aggressive buying, right? Buyers got trapped, sellers came back down. So I sold from here and I took profits somewhere down here. Right, so I'll just show you now on the footprint chart. I'm doing these webinars every single week, guys. Every Tuesday, 5:30 p.m. UK time. So next time I'm going to show you what a heat map looks like, right? So it's very similar to a footprint. So this is a heat map where you can see all the resting limit orders at every single price level. So it's like a depth of market, but you can actually visualize this, right? And these little bubbles, so this is similar to Bookmap, but I have it on Sierra chart. So you have these little bubbles that show aggressive buyers and sellers. Then you have these limit orders that are sitting at every single price level. So here you can see all the different limit orders. Let me just change the tick settings of this chart, 0.5, because NQ's got a lot of ticks. You don't need to see the tick information at every level. So this is another, I use a heat map as well as a footprint. So you can see there's 25 sell limit. So these are sell limit orders above price and buy limit orders here. So you can see all the limit, you can visually see it. And my coloring threshold will highlight areas where there's high amounts. So here you can see red, it's highlighted. There's 41 limit orders, 17, 24. The light color, the dark colored ones are areas where you see low amounts of limits. The darker you see the heavier sell limits, right? So let me show you why people use heat maps. So if you're looking for a sell, let's say this is your area of supply where you want price to come up and you want to short this area. So from a limit perspective, order perspective, you want to see loads of sell limit orders here. You then want to see aggressive buying, but price not going anywhere. Why? Because sellers are reloading. Sellers are putting iceberg orders. So you will see heavy limit orders on this side. So if I show you the heat map real quick, right? You want to see loads of sell limit orders at this price level. Like you can see here, 41.22. You want to see loads of sell limit orders here, but they can't get triggered. Then eventually when you see the aggressive selling on the footprint, what you want to see on the heat map is these sell limit orders start to push further down and further down, because what that is confirming is that passive sellers are now moving their limit orders down to support the downward move in price, right? Because if limit orders don't stack up, see, what people got to remember is when price always moves in swings, right? Now let me show you the mechanics behind it. When price moves down, it does something like this, right? Now what happens in these pullbacks is there are sell limit orders in these pullbacks where buyers get absorbed. So buyers try to buy up, nope, the sell limits outweigh them, price goes down, right? So on a heat map, you will visually see if price is moving down, you'll see loads of sell limit orders here, then they will slowly start to move down. Because what they will do is they will control the buying and make sure that they are outnumbering them, and then buyers will move away, price will push down, buyers will remove for their buyers will lose aggression, price will move down, right? That's what you want to see on a heat map. You basically want to see limit orders moving and following price, right? So but we're going to come to heat maps later. We'll probably do you know what, I'll do heat maps next week. Actually, we'll do heat maps and depth of markets. Today will just be footprint charts, and we'll do the rest next week. So I'll show you this example from the trade I took on Thursday. Right, so, whoops. So let me just delete this. So on Thursday, in terms of analysis, there really wasn't much to do. All I had just done was mark out all-time highs, right? Because if you follow the laws of auction market theory, right, you can see price made a balance here, right? So we had a small balance range, right? Then I was expecting to break outside of this balance, test the highs and continue higher, or sweep those highs, come back in and short the top of that balance range, right? So very simple in terms of, there wasn't really much analysis going on there. Sorry, let me just... Right, so looking at the footprint, right, you can see it very clearly here, right? You can see the delta, right? We're getting, so these this section here, I've got the delta at the top, right, and it highlights in light blue anytime buyers get really aggressive. So you can see here, right, buyers are getting really aggressive because delta is highlighting strong. You can see we've got a lot of imbalances to the upside, right? Let me just zoom in a little bit. So you can see a lot of buy side here, right? You can see these imbalances here. You can see high buying delta 401, right? You can see price close well above. So if we're getting some bullish momentum up into here, price should just continue all the way higher, right? Now what happened on the heat map, right? When we're going to do this, do you know what? Let me just do it now actually. I think I can do a chart replay. So this is Friday at 9:27, right? I'm going to show you live replay of how order flow works. So Friday was the 17th, was it? 18th. So I'm just going to show you the heat map. Right. So here we can start seeing heavy sell limit orders here, right? Now price starts to come down. You can start now seeing limit orders pushing price further down. These sell limit orders are still here defending this area. Here some bigger orders are now following price movement for price's movement down. Price is ticking down. Here you can see heavy limit orders moving down. This is a signal. This is a signal, right? You can see these limits stayed over there. Sell limit orders pushing. Now we've got these 15s here. Let's see what happens, right? Now you see them 15, they've moved down. They've moved down more ticks. 16, they're adding to their limit orders, right? And slowly price just starts to move down. There you can see aggressive sellers come in and they tank price down. Sell limits, that's your signal to enter. You see that 22 come up there? They've now moved it down. That is your signal to enter. That is exactly what you want to see from a heat map, right? So now going back to the footprint, you can see aggressive buying come in. Now on the heat map, you can see sell limit orders having their price high. Now look at this. We have aggressive selling with 252, price closed below the point of control, right? Now these imbalances, they got traded through, right? And this imbalance, what you can see is, you can see this as a buy side imbalance. So if you highlight this area, look what happened. It came through, buyers came up to it again, and we saw these wicks and price came down. So that's your signal to enter. Stops above here, your entry here, and price will go down. So you see this aggressive buying, right? Price not moving higher above all-time highs. So if we're trading above all-time highs, you want to see price really moving high. We didn't see that. We saw sellers come in. Look at the aggressive selling on the volume profile. It's just all sellers, right? And it's pushing price down. You can see aggressive delta. Price goes lower and lower, right? So that's what you want to look at on footprint charts. If you see aggressive buying, you have to see continuation. If you don't, that means sellers have got iceberg orders. And what we're going to do is next week, right, we're going to actually show you how reloading looks on the depth of market, right? So I'm going to show you what it looks like. So this is going to be next week. So next week, we're going to do heat maps and depth of market. And we're going to be talking about reloading. And I'm going to be talking about imbalances as well. So what you'll see on reloading, right? Remember I was talking about iceberg orders reloading. So that is to do with this side here. So for sellers to reload, you want to see aggressive buying into this area. And then you want to see positive limit orders here. Loads of high numbers. That means sellers are reloading into this and they're absorbing all the buyers at this level, right? So that's what we're going to do next week. So this week, this session is coming to an end, so we're going to end it here. I hope you guys found that valuable, guys. Make sure you are followed to CTI. Drop me a follow and subscribe on YouTube. I post loads of content. I'm on Instagram. My YouTube is AMTOF Group. My Instagram is AMTOF Group. We're going to be back here next Tuesday doing depth of market and heat maps. Hopefully you guys found this sort of the initial stuff. Hopefully you took some value from this. I'll see you guys next week. Take care, guys. Have a great day and all the best.